Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with bad corporate behaviour in the news today. But first, in the US, there is more evidence that Americans are restraining their spending. May consumer credit balances fell more than expected, taking the consecutive declines to 3 months. The May 5.3% drop has compounded to 30% in the last 3 months as wallets remain closed. This is a core contributor to the US and worldwide recessions and indicates it will be very deep and longer lasting than some analysts have assumed. While the June data is likely to show the decline hesitated, July data will almost certainly show it retreating again. And the OECD released updated corporate tax tracking data overnight, and they say it shows there is a misalignment between the location where profits are reported and the location where economic activities occur. Revenues per employee tend to be higher where tax rates are zero and in investment hubs. Visa and MasterCard are the icon businesses that show these traits. A new report, which Facebook itself commissioned, says the social media network has not done enough to protect users from discrimination, falsehoods, and the incitement to violence. In Australia, regulators and bankers are colluding to sanitise bank financial results. When a customer can't pay a debt, it is impaired. When it is due, it is past due. But the ABA is extending the pandemic deferral program for many customers who can't pay for another 4 months. And APRA, in conjunction with ASIC, is actively encouraging the move, giving cover to bankers not to provision such loans. It is a twist on responsible lending both regulators would prosecute if they weren't party to it. Deferring loans might be a good moneymaker until the customer can't pay. Then the regulators will expect the shareholders to take the loss, which will be much larger than if it was recognised when it first occurred. It is amazing irresponsible regulation and banking. You do wonder what the auditors will think. The US Treasury 10-year yield is marginally softer at 0.65%, and the gold price is up by another $14 to $1,811 in a new 9-year high and within 5% of its all-time high. Oil prices have little changed. And the Kiwi dollar has stayed firm, now just on 65.7 US cents. On the cross rates, we're unchanged at 94.2 Australian cents. Against the euro, we're hanging in there at 58 euro cents. That means our trade-weighted index is 70.3 and it's highest since January. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.